Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SERVICENOW INC quarterly report. ServiceNow Inc. offers a wide range of cloud-based services and products that cater to various industries. The company's primary offerings include digital workflow solutions, AI platform for digital transformation, robotic process automation, process mining and analytics, low-code/no-code development tools, asset management, integrated risk management, IT service management, operational technology management, security operations, strategic portfolio management, customer service management, field service management applications, human resources, services, legal and workplace service delivery products, app engine product, automation engine platform, privacy and security products, source-to-pay operations, mobile-enabled manufacturing application. These services are provided to various sectors, including government, financial services, healthcare, manufacturing, public sector, retail, IT services, technology, and telecom. The ServiceNow Inc. Now stock has experienced a decline of 1.47% to 2.29% over the past year. Despite fluctuations, certain news events have resulted in no significant change in its stock price. One notable event was the Q2 2025 earnings report, where the company reported positive results but saw only a 0.62% dip in aftermarket trading. Other types of news that typically lead to non-significant stock price changes for ServiceNow include routine product announcements and enhancements, analyst rating reiterations and minor price target adjustments, and company go-live announcements for specific clients. These events are often anticipated by the market and do not trigger significant daily stock movements. The lack of significant change in ServiceNow's stock price can be attributed to these types of news events, which are generally factored into the company's valuation. As a result, investors may view them as expected operational growth rather than surprises that would impact the stock price. The primary drivers of revenue growth for a company can be identified through an analysis of its financial summary. The key contributors to revenue growth in this case include subscription revenues, professional services and other revenues, and regional expansion. Specifically, subscription revenues increased by 21.5%, while professional services and other revenues grew by 31.4%. Additionally, the company experienced significant growth in North America, 20%, EMEA, 24.6%, and Asia Pacific and other regions, 25.2%. These factors collectively contributed to a notable increase in revenue. Net income and profit margins. A shift in performance. The company's net income has experienced a significant increase, with a 16% rise in the 3 months ended September 30 and a 37% jump in the same period last year. This upward trend continued into the 9 months ended September 30, with a 29% increase from the previous year and a 39% surge compared to 2024. However, profit margins have shown mixed results. Gross profit margin has decreased slightly for both the 3 and 9 months periods, dropping from 79.2% to 77.6% and 78.9% to 77.8%, respectively. On the other hand, operating profit margin has seen a notable increase, rising from 15% to 16.8% in the 3 months period and from 12.3% to 14.2% in the 9 months period. The reasons behind these changes are not explicitly stated, but it is likely that cost-cutting measures or improved operational efficiency contributed to the increase in operating profit margin. The decrease in gross profit margin may be attributed to increased costs or a decline in sales prices. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash provided by operating activities has increased from $2,632 million in 2024 to $3,206 million in 2025, demonstrating a positive trend. This increase suggests that the company is efficiently managing its resources and generating sufficient cash to cover its operational expenses, indicating a strong financial position. The company's debt level has undergone significant changes in the recent period. While total long-term debt decreased by $401 million, strategic investments in privately held companies increased substantially from $472 million to $1,508 million. However, when considering net long-term debt, the change is relatively stable at around $1.5 billion. Meanwhile, interest expenses have remained largely unchanged, indicating that the company's financial obligations are manageable despite fluctuations in its debt levels. Management is optimistic about the company's outlook, citing a growing customer base and increasing value received from the Now platform. They expect subscription revenues to increase in absolute dollars but remain relatively flat as a percentage of revenue. The company will continue to invest in new services, core technologies, and business operations to enhance its platform and customer experience. Management also expects to see leverage from continued G and a productivity and generate positive cash flows from operations during 2025. The company has made strategic moves through acquisitions to expand its business. One notable acquisition is Logic.io Inc., which was acquired as per the records on page 42. This move demonstrates the company's commitment to growth and diversification through targeted investments. The company's financial summary reveals that while there is no explicit mention of dividend payments, it does indicate that the company has engaged in share buybacks. Specifically, a share repurchase program was implemented with an authorized budget of $4.5 billion, allowing the company to purchase its own shares on the market. That concludes the financial summary for SERVICENOW INC. Feel free to comment below, and I will be happy to answer them when possible.